Is the Fernie market cooling down or heating up? The answer is yes. November stats are in and they show a massive 30% drop in sales volume, yet entry-level buyers are still fighting tooth and nail for properties. We're living in a market paradox. I'm Phil Gadd, and today I'm breaking down why the gap between the home you may have and the home you want might be smaller than ever. Let's get into the Fernie market report for November 2025. Welcome to the Property Mindset Podcast, the home of the Fernie Real Estate Market Report. Okay, let's get into it. Market summary for Fernie Real Estate, November 2025. New listings in November this year, we had 13 new listings. That's up 18% on November 2024. New listings year to date, 235. That's actually down 9% on 2024. Sold listings last month in November, we had 12, and that's actually down almost 30%, 29%. So a short break from our show sponsor, eXp Luxury at First Tracks Real Estate Group. Imagine a real estate experience where your luxury property isn't just seen, but showcased, both locally and globally. eXp Luxury is about more than transactions. It's about transforming how high-end properties reach the market. With a blend of unparalleled global exposure, cutting-edge marketing strategies, and an elite network of professionals, eXp Luxury ensures your property stands out in the luxury market. Phil Gadd and the First Tracks Real Estate Group leverage this platform to elevate your listings, ensuring it reaches its full potential. Welcome to the new standard in luxury real estate. Year-to-date listings are also slightly down. Only 157 listings sold in the Fernie area this year in 2025. The median price is up very slightly this year as of December at $732,000. So let's look at the broader picture. The average list price for November last month was $767,917. That's down 8% on the same time last year. The average sale price is also down last month to $766,741. That's also down 5% on last year. Pretty much no change at the moment on year to date for list price and sale price. The average list price this year is $883,655. And the average sale price is $847,131. Days on market, sold to list ratio. As of last month, the sold to list ratio is up 3% to 99%. That means properties selling last month were selling almost at list price. On average. Days on market is down slightly, 80 days, pretty average, anywhere between 70 and 90 days were very, very average days on market. It's at 5.95, down 8%. You know, it's kind of an indication of a balanced market. Active inventory as of last month, 68, and that's also down slightly at 6%. Year-on-year increase of the average sale price over the last 5 years. It's kind of averaging out over the last 2, but still, if you bought a home here in Fernie in 2021, every year you would have increased its value year on year by 10.48%. That's quite a healthy number. Year-on-year increase over the last decade dropped slightly, but still very healthy. So if you'd bought a property back in 2015, good on you, because it would have only cost you on average $345,896 compared to today. Big jump to $847,000. So that's a year-on-year increase of 8.41%. So the median sale price, still year-on-year increase over 10%, but it's kind of averaging out over the last 3 years. And then the last decade, again, quite a healthy year-on-year increase over the last 10 years. For the median price, it is at 7.03. Okay, so we've crunched the numbers. Sales seem to be finding a bit of rhythm at the moment. Prices may be stabilizing, but if you're a regular listener, you know that data without context is just noise. So let's dig a little deeper into what's actually happening here in Fernie. I believe we're in a bit of a transitional period. And if you understand the mechanics of it, I believe also there's a serious window of opportunity opening up when we go into 2026. So let's first look at the headline number, inventory. Right now we're sitting at 5.95 months of inventory. Now, if you follow market cycles, you know that that's around the magic number for a balanced market. We aren't in the frantic chaos of a few years ago, but we also aren't in a slump. But there is a bit of a paradox happening here. While the broad stats say balance, the reality is much sharper. When certain properties hit the market at a certain price point and it's priced competitively, and at the lower end, we're still seeing very competitive offer scenarios. We are seeing this especially, like I said, at the bottom end of the market. Buyers are desperate to get into Fernie. So even though the overall market feels calmer, there's certain entry-level segment that's still a bit of a battleground. And here is the catch. Even though some of those sticker prices may look low, the value per square foot is quite high. You're paying a bit of a premium even to get in at the entry point. Just the reality of Fernie. Now, looking at the bigger economic picture, all eyes are on next Wednesday, December the 10th. That is the next Bank of Canada interest rate decision. Everyone's expecting a hold. The policy rate is currently sitting at 2.25% after the cut we saw in October. Right now, the market is pricing in at 92% chance that the bank will hold steady. So why the pause? Most likely, the economy is actually showing some muscle. Third quarter GDP growth came in stronger than expected, and there are still some underlying inflationary pressures. Even if the US Fed cuts rates on the same day, we expect the Bank of Canada to stand its ground. This is actually good news for us. It signals stability. We aren't in an emergency rate cutting mode anymore. We are in a predictable environment. Keep your eye on the November employment report coming out just before that decision. That will be, in my opinion, the final piece in the puzzle. So if we have a paradox where the bottom of the market is hot and expensive per square foot cost, but the broader market is balanced, where do we find the opportunity? Well, maybe it's in upsizing. If you own an entry-level townhouse or condo, you're holding an asset that everyone wants, you can likely sell that at a competitive situation for a premium price in this current market. Meanwhile, the mid to high-end market, the detached homes, the upgrades, are sitting at about 5.95 months of inventory. Those sellers aren't seeing multiple offers. They are seeing days on market tick up. So what's the strategy? You sell in a seller's macro climate and you buy in a balanced market. The gap between your current home and your dream home is likely never been smaller than it is right now. That is how you win in a transitional market. So let's wrap this up with a bit of a game plan. If you're a buyer, be strategic. If you are at the entry level, know that you're probably going to be competing. Have your financing buttoned up, nice and tight. If you're moving up the ladder, you have the leverage. Use a stable interest rate environment and the inventory choice to negotiate. If you're a seller, you need to be realistic. If you're at that entry price point, pricing competitively can spark a bidding war. But if you're in the higher brackets, you can't just stick a sign in the lawn. You need to present value because buyers have a lot to choose from. If you're an investor, watch the price per square foot. Don't get caught up in the frenzy at the bottom end where the maths don't work. Look for where the value is lagging, often in the mid-market segment that is currently softer. So that is the deep dive for November. We're heading in what looks like a very strong 2026. The fundamentals are there. The stability is returning. If you've got questions about where your home fits in this paradox, whether you're holding a hot ticket entry-level home or looking to make that move up, book a call with me using the link below. I'm Phil Gadd. Thanks for listening. But always stay focused, stay informed, and keep building that property mindset.